We're joined over the phone right now by Jefferies analyst Scott Mushkin. According to Bloomberg data, he is one of the most accurate analysts in the food and drug chain sector. He has a hold rating on the stock. Scott, thanks so much for joining us. We're glad to have you. What do you make of the results? It seems like the revenue a little stronger than expected, earnings a little weaker. What does that tell you about how the company's executing?
Yeah, I mean, the thing for Walgreen, and by the way, thanks for having me, the thing for Walgreen is their sales really, their comp store sales have been disappointing over the last 3 months. They were going up against very easy comparisons from a year ago period. And going into the quarter, I think with the flu, people thought it was going to be strong. It turned out to be weak. And in the end, they reported sales from their comp stores that were a lot lighter than people thought, and that hurt their numbers, and that's why they missed this morning.
Scott, we have to ask you, since we're New Yorkers, what do you make of that February announcement to buy Duane Reade? Is this a smart thing for the company? Is it going to help their bottom line for the rest of the year?
You know, for the rest of the year, it's going to actually be slightly dilutive. Moving forward, though, Duane Reade has done some interesting things here in New York with their front-end strategy. There's a store down on 17th Street and 8th Avenue, which is really quite nice. And so I think people are hoping Walgreens learns from Duane Reade and brings that front-end strategy, some elements of that front-end strategy, into the Walgreens stores to get those sales moving.
Scott, it's Erik Schatzker here. Quick question for you on margins. It does look, based on the headline that I just saw, that Walgreens was able to boost gross margins from the previous quarter. Do you think there's any more pricing power here for the company, given the fact that the economy is beginning to recover?
Yeah, I mean, I think last year they were doing a big inventory reduction, and that hurt their gross margins. They also got a LIFO benefit this quarter. So the combination of those two things, did help their gross margins. Going forward, the generic cycle is a little weak right now, and there is some pressure on that gross margin line. So we'll see if it's actually sustainable. But that's why you saw a boost in gross margins this quarter, as the comparison last year to the inventory liquidations.
With the healthcare reform that's due to really come into effect in 2014, we hear a lot about the in-store clinics.
Yeah, I mean, the in-store clinics, really it's just the volume. 2014, we had 32 million people insured. That's, bound to help the entire retail business as more people fill prescription drugs. And that's clearly a positive. We also have the positive of the generic cycle.
Okay. Scott, we have to leave it there. We thank you so much for your time.